Everybody. Thanks for joining us. My name is Samir Varma. I'm a partner in Thompson Hine's International Trade Group. Welcome to today's SmarTrade webinar. For those of you who joined us previously, this is the third installment of our SmarTrade Fundamentals series. The first two were in the last few weeks. The first one was on economic sanctions. The second was on export controls. And now we move on to the import side of the equation. Today, we're going to provide some insight on customs compliance issues for importers and information on import tariffs, opportunities for leveling the playing field a little bit. So I'm hoping that today will be a good session. I'm joined today by two of my colleagues, Michelle Lee, a partner in our International Trade Group based here in Washington, D.C., and Kristina Shcheglazova, an associate in our group based in Chicago. Before we get started, I do have a couple housekeeping items, just so that everyone is aware. Today's program is being recorded. We will send a link to all attendees within 48 to 72 hours of today's presentation. The PowerPoint presentation will also be sent to all attendees after the presentation. Quick disclaimer, this presentation is intended for the general information of individuals and organizations on matters of current interest. The thoughts and opinions being expressed today are those of the individual panel members only and do not necessarily reflect the opinions of the panel members' clients, employers, affiliates, or Thompson Hine. The content should not be taken as advice, as the views expressed are for informational purposes only. So if you do have any questions during today's webinar, please use the chat box. It should be located on the right side of your screen to submit questions that way. We'll answer questions as we go. We'll answer questions sort of during the presentation, maybe if we have time at the end of the webinar. But if we don't get to your questions, we'll follow up with you after the program by email or by phone. I do ask that when you submit the questions in the chat box, you submit it to either myself or the presenters, and we'll take the lead that way. CLE credit for today's webinar is pending. Please be sure to complete the verification of attendance survey. The link to the survey will be posted in the chat. We'll post it again later at the end of the program, and I'll announce the attendance tracking code at the end of the program and put it in the chat box as well. Again, thanks so much for your interest. With that, we'll go ahead and get started with starting us off. Why is customs compliance important? And how do import regulations impact me or my business? It's pretty obvious that customs compliance is important for all U.S. importers. They obviously can lead to supply chain disruptions. Products often are held at customs, which not only leads to delays in obtaining the product yourself, but it could lead to concerns with inventory management, stock shortages, ability to meet customer demand. Oftentimes when it is being held at customs, you'll need to find alternative suppliers. It can increase costs, complicate logistics, etc. And perhaps more importantly, it can lead to major financial penalties. Customs, as an enforcement agency, does enforce the regulations for a lot of other government agencies, and they can lead to substantial fines and penalties, and the cost to rectifying those mistakes, which could even lead to disclosures or looking at 5 years worth of imports, etc. Or maybe you have to re-export the products or destroy non-compliant products. It can all have a cost aspect to it. And finally, reputational harm. Violating import regulations can damage your business's reputation, leading to a loss of trust among customers and partners. Negative publicity from non-compliance issues could deter potential customers in the future. And a lot of those reputational risks, the reputational harm, can take a long time to repair. So it really is very important that we look at customs and we comply with customs regulations throughout your supply chain. So today, that's just the brief outset. But today we have a number of items that we do want to get through. We'll start with a general overview of customs and customs compliance and regulations. We'll look at key customs concepts related to classification, country of origin, valuation, and related aspects. We'll look at post-summary corrections and protests, as well as other import-related regulations, and then a little bonus at the end, when we talk a little bit more about other agencies. And I don't want to give too much away. I think Kristina will give that away later. And with that, we'll go ahead and get started. Kristina, do you want to take it away?
Thank you, Samir. Thanks everyone for joining us today. And I will start here with the main agency, because we're talking about customs. We are talking about U.S. Customs and Border Protection, or CBP. CBP enforces all U.S. customs laws and regulations. It was established on March 1st, 2003. After 9/11, customs functions moved from the Treasury Department to the Department of Homeland Security to improve national security. CBP also cooperates with other agencies, because those products that you're bringing in the United States, they have to comply with a number of regulations. CBP acts as an enforcement agent for those agencies, such as you see on the slide: FDA, CPSC, USDA, USPTO, DOL, and some other agencies. And we will talk about some import-related regulations and how CBP cooperates with these agencies on later slides. Now let's dive into the Customs and Customs Modernization Act of 1993. This act updated laws and regulations that had been in place since 1930s. It introduced two key concepts. First is informed compliance, and another one is shared responsibility. Under this act, companies are required to exercise what is called reasonable care, and in simpler words, which means it's just absence of negligence. Essentially, under this act, companies need to identify any gaps in their compliance and take steps to address those gaps. This ensures that companies meet all customs regulatory requirements, and you avoid potential penalties. Another general overview is basically what happens, how do you import products to the United States? Well, the first step is basically when you bring products in the United States, you have 15 calendar days to submit customs form 3461. Then you have and together with that form, you also submit such import documents as commercial invoice, packing list, some certifications if they're required, and some other documents. Then you file entry summary, or customs form 7501. And in that customs form, you also estimate duties that you're going to pay. And then basically after filing entry summary, you have a period of 314 days when you can file post-summary correction, which is actually new entry if you have to file a PSC. We will talk about PSC a little bit later. And if you don't file PSC after those 314 days, it is final state, which is called liquidation. This is when your entry is considered as liquidated, and you pay customs duties. In some cases, CBP may come back to you and request some extra duties, or opposite, like give you a refund if you overpaid those duties. This is just general overview, and now we will dive into key customs concepts. Michelle, do you want to start here with our view of these and customs classification? Michelle, maybe you're on mute.
Thank you, Kristina. Thank you, everybody, to be on the panel with us. So for the next 10 to 15 minutes, we will talk about some main issues for consideration. And I will start with tariff classification, and Kristina will follow up with the country of origin, and Samir will take care of the valuation, drawbacks, record keeping, and CBP rulings. So now let's begin with the fun stuff. So classification is really based on the harmonized tariff schedule of the United States. We call it HTS-US, and HTS-US is formed with 10 digits. The first 4 digits speaks to what chapter this product's HTS will fall under. And up to the 6-digit numbers, you were starting to see the subheadings. And the first 4 to 6 digits are part of the international harmonized system, meaning that all the countries who are the members of the World Customs Organization will have the same 6-digit numbers. If the products are the same, they should fall under the same 6-digit numbers as their HTS classification. When it gets to the 8-digit numbers, those were part of the national HTS code. So certain countries might differ from what the HTS US would have, because HTS US is really the national HTS codes in the United States. Kristina, next slide, please. So when you look at the HTS numbers, you will see a couple columns here. The first column, you see heading, and then you see subheading, which really tells you what chapter this product should fall under, and the subheadings within the chapters this product will fall under. And then second column is the statistical suffix, which is about the 9th digit and 10th digit of the entire 10-digit HTS codes. The 9th and 10th digit will not have any legal consequences, meaning that it will not determine your rates of duties. But it is really for the reporting purpose for Census Department and CBP and ITC, the International Trade Commission, and Customs, the 3 agencies to collect all the trade data. The next column you will see is the article description. The article description is very important because as we talk about some of the general rules of interpretation of how you should classify your product, you will know that the headings description and subheadings description will be almost interpreted as a rule or laws for those products in terms of their classification. Then you see a unit of quantity. Sometimes it will be required to report the number of the quantity. Sometimes you will only be required to report the value depending on the products. Then you get to the most important section at the column, which is the rates of the duties. You see column 1, those are the countries that we treat as our friends, for lack of a better word. They tend to have, they will have the most favored nations treatments, have a lower rate, or even a special, more special preferential rates according to the trade agreements. And then column 2 is some countries that do not enjoy the most favored nations treatment. They tend to have a higher rate. And China, there's some discussion that to move China from column 1 to column 2. Next slide, please, Kristina. So when we get to classification analysis, the legal text, meaning the product description column, will be considered as the rules of, it's actually considered as laws. So that's why we call it legal text. So it's not just something that, oh, this is a description, but in fact, we take it very literally most of the times because they are considered to be the laws of the HTS US codes. And then next you will, when you have ambiguous questions and in terms of the legal text, you will resort to some applicable US court or CBP rulings as precedents. And the explanatory notes, the official interpretation of the World Customs Organizations sometimes will come into play as well. But first and foremost, we look at the product description in the HTS US codes. Next step, please. So I want to give you a sample example, like how do we do the classification analysis. So here we see, let's say there is a 2020 new model, a mild hybrid passenger vehicle. It has a ICE engine, the internal combustion engine, and then you also be equipped with some battery that helps to restart the engine, but does not itself allow for an electric-only propulsion. So the question is should this vehicle be classified under the Chapter 87 as a ICE vehicle, meaning the internal combustion engine vehicle, or as a hybrid vehicle falling under another classification? Now, what do we look at here? We need to look at the first 4 digits, which is really telling you where the heading of the products are. Or obviously, this product should be a motor car, so we know that the first 4 digits should be 8703. Next step, please. And then the question is really, what is the 6th and 5th digits? 5th and 6th digits, should it be a hybrid vehicle under 8703.40, or should it be a ICE vehicle under 8703.23? Because here, although you have some electric battery here, but that electric battery itself could not provide propulsion. So it doesn't fit the 8703.40 in terms of the subheadings description. So you know that the other option doesn't work here. So the only option we have here is just to put it under 8703.23 as an ICE vehicle. And depending on the capacity of the engine, then you will put under which the 8th and 9th, 6th and 7th and 8th and 9th digits. That's pretty much what you are looking at. You go by the first 4 digits, you decide what's the first 4 digits, then you look at the second 2 digits to decide what's the subheading you should go under, and then you go the next step. And there are a couple rules that we will discuss in the next couple of slides, but there are the slides will actually tell you more details, and I will skip over those. Why is classification important? Because it's very obvious, because it tells you what rate of duties you should pay, and at the end of the day, it's one of the major duties an importer worker should have. So you should pay reasonable care to make sure all the products are classified correctly. And where are the difficulty coming from? There are often some competing classifications, and like the example that we just talked about, it seems like this is making a common sense way. But if you look at the description very carefully and literally, you know that the option, even though it sounds like it could be a hybrid vehicle, but in fact under the HTS US code, it should be considered as an ICE vehicle only. And then there are sometimes you have difficulty getting information from the vendors, and without knowing all the information about the products, sometimes that gives you some difficulty to classify the products, and you may have insufficient information from just the commercial invoices, and oversight often happens for the custom brokers, and that should not be, I should not say there are constant changes to the HTS US codes, but in 2022, there was a overhaul of the HTS US codes that might give you some pause when you classify your products, because the HTS US codes might have already changed, and that impacts your applicable duty rates.
Thank you, Michelle. I will jump in here now with country of origin. Same as
Kristina, yes. Real quick. Sorry, if you can go back one slide. I just want to make one point.
Yes.
And Michelle, and this is something that we've seen obviously with a lot of our clients, right? Is that with HTS US, right? It's harmonized. It's supposed to be harmonized for many, for the imports of products all over the world. Anybody who is part of the World Customs Organization signs on to this, and so all the codes are supposed to be the same, right? They're supposed to be harmonized for the first 6 digits.
Right.
Right. Yes.
But one of the difficult issues that we do find is that companies or importers in various countries often do think their codes are different depending on the country they're in. And the reality is that those various countries, their customs organizations may interpret sort of classifications differently, but according to the WCO, it's supposed to be harmonized, right? They're supposed to all be the same to allow you for this entire framework. But I was just wanted to mention that because I know that a lot of clients ask me questions about this, about sort of, how all these countries can sometimes have different classifications. So technically, they're not supposed to, but it does happen.
Right, because each agency, the enforcement agency, actually interpret it differently sometimes. And but like I said, if the little terms of the description are very obvious, that should be the dictating rule of your interpretation. So I
just wanted to mention that. Go ahead, Kristina.
Okay, thank you, Samir. Thank you, Michelle. Let's talk about country of origin now. So same as classification, country of origin is very important because it tells us how much duties we're going to pay to CBP. And as Michelle mentioned already on previous slide, it depends on what countries you're importing. You will be paying most favored nation duty or kind of like standard duty from most of the countries who are that are part of World Trade Organization, or you're going to pay with what we call column 2 duties, which are higher, for example, for Cuba, North Korea, Russia, and Belarus. In some cases, if we're looking at free trade agreements or some other higher rates like Section 232 or 301 or anti-dumping or countervailing duties, you also will be paying higher or lower rates depending on the country of origin. And country of origin is also important for marking requirements on labeling and government procurement regulations. And I will just quickly go through this slide again that Michelle showed you, just to point to those columns where you can see rates of duty over that column 2 with 10% versus, for example, 2.5%. And you can see that's column special for certain preferential treatment countries and regimes. So what test we're looking at when we have to determine country of origin? Basically, when we're talking about non-preferential rules of origin, which is general rules of origin, not for different FTAs, free trade agreements, we're looking at two basic tests. First test is like general rule is when an item was manufactured in the country, or it was grown in the country, or it was mined in that country. So it will be the country of origin of that item when it was completely, for example, mined. It will be the country of origin where it was mined. But most of the goods actually, they are a mix of different inputs or components from various countries. So you can bring one component from China, another component from Canada, and put all this together, for example, in Germany. And here you have like very simple, but actually in most of the cases, complex question: what it will be the country of origin of that good? And there is no some general formula for all of the goods. You will have to look at product by product. There is a test which says that that good has to be substantially transformed in the country, which means that in new and different article of commerce with a new name, character, and use has to you have received that from the inputs that you used in that product. And if you receive a product with new name, character, and use, then it's considered substantially transformed. If not, then not. And different tests are applied for different FTAs, for Buy American, for marking and labeling. And same as Michelle, I want you to give a couple of examples of how you would determine country of origin for some products. Let's start with this example for a laser distance measurer. You can see a lot is going on this slide. We have different components from, for example, laser diode from Taiwan. We have laser diode frame from Vietnam. We have PCB, which is assembled in China from different components. We also have Swiss design programming code. We have also laser lens, other components that are made in China. So in Vietnam, we can bind and solder the laser diode and frame to the PCB. We then calibrate and adjust the PCB's firmware code. We attach, adjust, and calibrate a Chinese origin laser lens. We add metal shielding device and send the product to China for final assembly. So you can see that a lot actually going on in Vietnam. In China, they perform final assembly, including soldering, testing, and calibration, and then they package the completed LDM to the United States. So at first view, you would think that there were a lot of steps that have been done in Vietnam, and probably the country of origin of these products is Vietnam. But this is a real example based on one of the customs ruling. But CBP in this case decided that the country of origin of this product is not Vietnam, but China. And one of the reasons was because most of those components that we discussed above, they are from China. So even though there were a lot of steps done in Vietnam, the country of origin was decided as China. So you probably don't want your product to be originating from China, because you, in 99% of the chance, you have to pay Section 01 duties, higher duties. So you would have to think, what can I do maybe in my supply chain to change my country of origin from China to Vietnam? And you will have to think, maybe I'll have to change country of origin of laser diode or lenses or some other components, or add some additional steps in Vietnam. Maybe they will change, maybe they will not. Again, this will be decided by case. Another example is a little bit less complicated. We have basically a camera and video recorder, and in China, we have PCBAs that is manufactured with surface mounting technology. Then PCBA components placed and soldered onto bare PCB, and other main components for these camera and video recorder are also from China. Final assembly is conducted in Germany, and the process is pretty simple. You just basically attach all together. So here you also would ask yourself, what can I do? Maybe you can just accept that your product is originating from China, but you can ask yourself, what can I do to change the country of origin? And interesting that maybe you can just install certain software that was developed in Germany for that camera. And if that camera cannot function with that specific software, maybe it will change the country of origin from China to Germany. So again, it's just like what you have to learn probably from these slides is that there are certain ways to change country of origin of your product. Some of them are complicated, some of them are not, but there are ways. And because we're running out of time, and Samir knows that I'm strict on time for this presentation, I will not be stopping for this example, but you can review it later. Samir, do you want to jump in and talk about valuation now?
Yeah, sure, no problem. So one of the other issues that we wanted to talk about today was valuation. Valuation is an important issue simply because while most importers, U.S. importers, think that it's a really relatively straightforward analysis, the valuation is the value of the product, often customs doesn't necessarily agree. And there are certain situations when you're dealing with sort of related party transactions, or maybe transactions where it's not necessarily a fully arm's length or bona fide sale between two parties, the valuation can be changed. Obviously, valuation is important because all duties and fees imposed are a percentage of the value of the merchandise. The way customs looks at it is they look at five, and then the 6 different methodologies, and they go in this order from 1 through 6 that is shown on the screen here. The first method that customs prefers, and will always prefer, is the transaction value. If you can go to the next slide, please. Right. Now, transaction value means price actually paid or payable for the merchandise when sold for exportation to the United States. It's the price you would pay if you were on purchase order basis with a third party. You don't have any relationship. There's nothing that you have done or changed to influence the price between the two parties, such that you are purchasing a product, you're importing it into the United States. The price you actually paid or what is payable for that merchandise is the transaction value. That's the preferred method by customs. There are certain ways you can have exclusions to those. Oh, sorry, if you go back one. There are some exclusions, including international freight, insurance, and other CIF charges incurred by the buyer, which you can exclude from the transaction value, lowering the transaction value. But there are other additional costs that may be added to it if there are certain aspects of the transaction that were provided to free, if there were certain selling commissions, if anything that influenced the price in any way. Yeah, next slide, please. So if transaction value is unavailable because of the relationship between the parties, or because there's some that it's not really a bona fide sale between two unrelated parties, or if there's other aspects to it, you can look at the next preferred method would be transaction value of identical merchandise. So that would be value of merchandise that has also been imported and was imported, and it was a previously accepted customs value. You can look at those values and say, hey, if we had done it the same way, this would be the transaction value of that merchandise. It's the same thing. It's the same idea for the concept. Oh, no, if you go back, I'm sorry. If you go back, yeah. It's the same concept with transaction value of similar merchandise, where you look at similar merchandise that is almost exact. It's not the identical merchandise that you imported, but it's similar enough that the transaction value can be used. Then there's the deductive value, which is the resale price in the United States after the importation of goods. But you can deduct certain items such as commissions, transportation, insurance costs, customs duties, etc., maybe even the value for the processing. But the real number is often the computed value, especially if you have real related parties. So you would basically compute the value based on the sum of all the costs associated with it, like the materials, the fabrication, the processing costs, add in a component for profits and general expenses, and any other assists, plus maybe packing costs, and create a value that you would use for your customs valuation purposes. Next slide, please. So here's just a quick example. This is a relatively straightforward one. Company A, Company B, unrelated. They pay $2,000 for the products. It includes an amount for ocean freight and insurance. Because this is the price paid or payable, and if it says Company B would have charged Company A $200 for the toys, had there not been any sort of relation, that changes a little bit. And that way you would reduce the $150 or any other indirect payments, and the total would actually be $2,200. Go to the next slide, please. Where these real issues come in is with related party transactions. So related party transactions is when there's most often this comes up when companies that are under common control of a parent entity are transacting with one another, meaning a company has a parent company in Europe or has an affiliated company in China, and they are importing the products from that related party. This is a highly risky area from a valuation perspective, because customs always looks at these related party transactions and basically says that it is highly likely that the relationship between the two parties likely influenced the price in some way, likely reducing the price in some way, simply because of the relationship. A good thing to note here is transfer pricing models that are created for tax purposes aren't always accepted. And they're not accepted just in general as just that piece of evidence. They're a piece of evidence, but they can't be just used solely for the purposes of determining valuation. You have to actually look at the nature of the relationship. You have to look at whether or not that relationship influenced the price. And if it did, then you have to use a different methodology of valuation. You can't just use transaction value. Next slide. Yep. So other difficult issues that come up often with valuation is that freight costs. Companies are often trying to reduce their transaction value by deducting the freight costs, but you have to have real proper documentation throughout. Oftentimes there are companies that don't have anyone fully responsible for identifying customs valuation issues, or perhaps it's located in a department that is looking at it for a different purpose, like the tax analogy that I used earlier, and may not be using it for a customs purpose. Customs regulations different than tax regulations. The valuations are different. The methodologies used are different. There may be last-minute changes to invoices that often happen. Invoices are created, they're changed, they're modified. It may not be reflected always in the actual customs entry documentation. And oftentimes customs brokers may be doing their job for a specific purpose, but may not be looking at the valuation issues, and honestly may not even have the information available to them that a company would, although the company is still often relying on the customs broker. And that sort of, even though you use customs brokers, obviously the import of record is the one that's responsible for compliance with all customs laws and regulations. They can't just rely on the customs brokers to do the valuation for them. So I'm going to quickly talk about drawbacks. Drawbacks allow you the ability to get a refund on certain duties, taxes, and fees that have already been lawfully collected at importation. So you've imported products, you've paid the duties, something has happened to those imported articles such that maybe they didn't enter U.S. commerce, they were exported, or they were destroyed, or there's something that happened to those materials such that you are asking for a refund of the duties that you paid. Refund is limited to 99% of the duties paid on the imported merchandise and must be filed within 3 years after exportation or destruction of the articles. There's two common drawback types. One is where you can actually identify directly the materials that were imported and what happened to them such that you can obtain drawback for those articles. There's also a substitution manufacturing where the products are being imported, placed in inventory. Maybe you can't directly identify it, but there's enough merchandise of the same kind or quality that are being exported that you can identify an amount for which you can obtain drawback. These are highly document sensitive issues, and drawbacks are very difficult to obtain unless you have all the evidence and all the documentation to back it up. We've seen this a lot with many of the companies that we work with. Next slide, please. Record keeping. Keep all your records, keep all the documentations for a period of 5 years, at least from the date of entry, often more. We often ask companies to keep them longer. The reality is that with electronic files now, these files are kept for periods of longer than 5 years. They can be maintained either at your, you must have access to those 5 years worth of data, either housed within your company or with brokers or with somebody else. But really but 5 years is the general rule of thumb. Lastly, I wanted to quickly touch upon CBP rulings. I know Kristina mentioned this earlier, but CBP rulings, CBP has a system whereby U.S. importers can ask for can conduct a rulings request and ask for CBP to issue a formal ruling on an aspect of the imported goods, whether it's valuation, country of origin, etc., free trade agreement status, etc. These rulings are actually found, and they are made public and issued online at this rulings.cbp.gov site. It's called CROSS, the Customs Rulings. It's called the CROSS system. So any person that is an importer of record or has a direct and demonstrable interest in the question presented can request a binding ruling from CBP. They are generally issued within 30, that once you make the request, maybe it's concerning valuation or classification of a certain product, they're generally issued within 30 days after receipt of the ruling request. That's a general rule of thumb. Oftentimes, customs will come back with different questions that could extend that time frame, and you may have some back and forth. But this is a really really good thing that customs does, is issuing of these rulings, because it allows you to get a formal document that states exactly what a classification is, the valuation process is, the country of origin based on substantial transformation, etc. It is customs telling you exactly what the product is and the issue that you have, and you can use that piece of paper from then on whenever you are importing products. It's a wonderful thing when we do this often for many clients, and it's also because it comes back relatively quickly. So post-summary corrections are essentially when products are entered into the United States, they undergo what's known as a liquidation cycle. They are entered, but they're not considered final for a period of 314 days. That's until they are liquidated. During that time, U.S. importers of record have the ability to submit post-summary corrections, which is essentially to correct information on those entry summaries to make it more in compliance with regulations. They can be filed within 300 days from the date of entry, or 15 days of the scheduled liquidation date, whichever is earlier. You can do liquidation extension requests, which would maybe influence the time or your ability to do post-summary corrections. And there's really no limit to this. The key aspect of this is that if you have issues with your entry, you want to correct them in advance of them being liquidated. The next one is protests. Protests are post-liquidation. So after liquidation, you can submit a protest to customs changing some aspect of that entry. It must be filed within 180 days after liquidation. The only issue with that is they undergo a little bit more scrutiny. The review of a protest is very different than the review of a post-summary correction. There's actually an import specialist that will go through and look at the grounds for the protest and determine whether or not the protest is valid or invalid. You have 180 days post-liquidation to submit the protest. And with that, I'll hand it over to Michelle.
Thank you, Samir. So let's dive into the slide on the product compliance upon importation. Safety is our top priority. We just need to ensure that our products protect consumer health and safety. This means that our products should adhere to all relevant safety standards and regulations. Next, import compliance gives us the market access that is crucial for getting in. It is crucial to get the uninterrupted access to the U.S. market. Non-compliance will lead to delays, rejections, and even bans on products, which we will talk about later in our later slides. And there is legal obligation. By following the rules, we can avoid fines, penalties, and potential legal actions. So this will save us money and keep our operations running smoothly. Lastly, and most importantly, our brand reputation. Compliance helps us to maintain our consumer trust and brand integrity. When the customers know that we prioritize safety and legality, they are more likely to be more loyal to our brands. And Custom also has its list. They never say this, but they have a secret list that people, the more you are in compliant, the topper you go on their list, the more scrutiny you will receive in your future entry clearance. This is a secret, but it is a very true secret. So next slide, please. So for example, let's talk about FDA products compliance. Really, what is the import compliance? It is about being adherent to all these legal regulations and import requirements for all these regulated products, depending on what products we're talking about here. Let's take tobacco products, for example. All tobacco products imported into the United States must comply with the FDA laws and regulations, including the Family Smoking Prevention and Tobacco Control Act. The FDA's Center for Tobacco Products, CTP, oversees these regulations and work together right now with FDA's import operations and customs to ensure all the tobacco products are compliant with the Tobacco Control Act. In tobacco products, another example is that tobacco products must, whichever meets the definition of a new tobacco product, must obtain pre-market authorization. Without marketing authorization, all the products are considered unlawfully marketed, can be detained, and refused for admission or seized by customs. Next slide, please. And then you can see the CPSC product compliance. CPSC regulates consumer products. So a lot of times the question you want to ask yourself first is, what is a consumer product? The next question we typically want to pay more attention is whether your product is a children product, because children products have a higher standard and more mandatory requirements. And it's crucial to ensure that all general consumer products comply with the relevant safety standards. This means the products must meet the guidelines set by the Consumer Product Safety Commission. In some cases, a General Certificate of Conformity, or GCC, may be required. And like I said, children products have a higher and stricter requirements. These products must undergo mandatory third-party testing for harmful substances like lead, and additionally, they must comply with other relevant safety standards. For example, toys and baby cribs, all these products that children may use. CPSC pays close attention to them. Any non-compliance will lead to seizures, recalls, and penalties, which you do not want to see. So next slide, please. Next slide is our bonus point, and I will hand it off to Kristina and Samir.
Thank you, Michelle. Yes, so now we move to our bonus section, and we will talk about what if we don't comply with everything that we have discussed previously. And on this slide, you can see that customs have a lot of enforcement actions they can use. First of them is examination, detention, and release. So after you filed entry, CBP has 5 working days from the date of the presentation for examination to decide if they want to release your products or they're going to detain it and later seize it. This rule applies only when no other agency has determines the admissibility. For example, if FDA determines the admissibility, there will be some other rules. So if CBP decides to release the merchandise, the port director will issue a permit to release, and merchandise not released within 5-day period is considered detained. Then we have another enforcement actions is like request of information and notice of action, or we call them CF28 or CF29. CF29 is just a request from CBP when they typically do not understand completely what your product is. So they send you an email asking for some additional documents, so they could make a decision about, for example, classification or other country of origin, other issues. CF29 is notice of action. I'm sorry, and in this case, CBP actually already have some preliminary decision about your product, and for example, they want to change classification code, so they send you CF29 saying that you classified your product incorrectly, and they propose a new HTS code in CF29, but they give you some additional time to respond and provide certain additional evidence to support your initial classification. Then we move to customs audits. It's another enforcement measure, and CBP sometimes selects importers for customs audits on different criteria, but one of them, for example, it can be volume of imports or some previous problems that you had with CBP or some compliance history. And if during that customs audit CBP finds out about certain violations, they can refer the case for investigations. And overall, everything can result in criminal and civil penalties. And civil penalties are vary, and some they can be significant. Depending on if you committed a fraud or your violation considered gross negligence or negligence, the civil penalty will be different. For fraud, it's domestic value of the goods that you imported. For gross negligence, it can be up to like 4 times of the loss of duties, or if there were no loss of duties, for example, if your product was duty free, then it is 40% of the duty-bill value. And for negligence, it's 2 times and 20% of duty-bill value. And before we move to prior disclosures, Samir and Michelle, do you want to speak about any practical issues that you saw previously on any of these?
Sure. Michelle, do you want to go ahead?
Yeah. So it's important to know that when customs come in to enforce on the import compliance, they can be acting on their own. They can be acting on behalf of other partnership government agencies that we mentioned before, such as FDA, CPSC. And when they do it on its own, not on behalf of another partnership government agencies, they have rules to follow. Why is it important? Because if they did not decide within 30 days after the products being presented, are being presentable for examination, not just actual examination, but presentable for examination, the products will be deemed excluded. Then you can file a protest. If the protest has not been ruled on or been denied, then if the protest hasn't been ruled on for 30 days, then it will be considered deemed denied. Then the matter can be immediately proceeded into the court. So it is fairly important to keep that timeline straight. And the government ownership agencies, they can also detain. But when they detain, they don't just seize your products. The ultimate result would be either they send it back to custom for seizure, or they are asking for recalls. In the CPSC example for the FDA, if FDA takes on the action on its own, instead of handing this issue to custom to enforce for them, even though custom is the one who's the gatekeeper, right? But who is issuing the detention notice matters. And if FDA decided to take on its own detention, the next step would be refusal for admission. Why does it matter? What's the difference between a refusal for admission, deemed exclusion, and seizure? It matters whether your products, if being deemed inadmissible to the United States, can be exported back to where the country it comes from. So it will make a huge difference for a lot of our clients if your products got held up or detained or seized at the border. So Samir, do you have anything else to?
Yeah, sure. You know, I think that like the examination, detention, release, seizure, those aspects, I mean, we could do an entire, I think we have done entire webinars on those specific, issues. Because there's an entire process, and because Customs is acting as the enforcement agency for so many other agencies, and it comes up all the time. I mean, the other one I would just focus on is really the RFI, the request for information and notice of action, that I think Kristina, you already mentioned. I mean, these are increasingly used as a tool by customs to understand and to probe a little bit more about the imports that are occurring, particularly ones that are subject, that they believe may be subject to additional duties, such as Section 301 duties, or the 232 aluminum and steel duties, or the country of origin is different than what you say, or you're doing, you're claiming some sort of free trade agreement. The CF-28s and CF-28s in particular, requests for information, we have seen this come into play a lot more frequently. And what ends up happening, and I think, Kristina, if you want to move to the next slide related to prior disclosures, this is essentially what leads to prior disclosures often, is because you see that customs is asking you questions about a particular product, and it says, as the slide says, valid only if filed before CBP initiates a formal investigation. CF-28s aren't a formal investigation, they're just a request for information. But once they have requested that, once they sort of have you in their crosshairs and they're asking questions, a formal investigation may be soon to follow. And that's I guess that's a segue for you, Kristina, to talk a little bit more about prior disclosures.
Okay, thank you, Samir. Yes, so in certain cases, you will have, I'm sorry, I'm getting echo for some reason.
If you're okay.
Okay. So in some cases, we will have to file prior disclosure to show customs compliance. So what is prior disclosure? Prior disclosure is a report of usually for the past 5 years. Sometimes it can be less than 5 years period. When you're, I'm sorry, I'm still getting this echo. Maybe Samir and Michelle, can you mute yourself? Thank you. I think that helped. Yes. So the scope of the prior disclosure can be not more than 5 years, but it can be short, less than 5 years. Usually, you file initial prior disclosure, and then you have 30 days to file final prior disclosure. But in practice, CBP usually grants you extensions, and it can be more than 30 days, depends on how big is your prior disclosure. In our practice, we saw certain prior disclosure that can last for several months and even up to 1 year. In the end, when you conduct all that analysis, internal analysis, and submit final prior disclosure report to CBP, you will have to pay certain amount of duties that CBP lost because of incompliance. And on top of that, you will also have to pay interest. And interest may vary. It can be from 5 to up to 10%, depends on the year. So why would you think you would have to submit prior disclosure? Well, first of all, and most obvious, is because you want to comply with customs laws. If there was certain incompliance, you want to fix that. Second, as I think Samir already mentioned, that when you submit prior disclosure, you will have to pay reduced penalties. As I mentioned on other slides, civil penalties can be significant. It can be the value of the whole merchandise that you imported, or up to 20 or 40%, depends on negligence or gross negligence. In case of prior disclosure, you can completely reduce certain penalties to only interest. So it means that you will not have to pay anything extra, only interest owed, and obviously those duties that you owe to CBP. It also allows you to conduct certain periodic self-assessments, so just to make sure that you're in compliance. And it also allows you to avoid lengthy CBP investigations. If you don't submit prior disclosure, if you know that you did not comply, you know that there is certain violation, CBP can find out about this at some point, and it will turn into a customs audit and then into investigation. Samir, do you want to give CLE, and then we can finalize our couple of slides? We have a couple.
Yeah, I just put it in the chat box. The CLE tracking code is TH3906. TH3906. We only have just two more minutes, so
Yes.
we're done. But go ahead.
So when would you submit prior disclosure? We already mentioned. Samir, can you mute yourself again? Thank you. Samir already mentioned that in practice, we see a lot of prior disclosure filed when a company receives CF29 or CF28. In those cases, when CBP finds certain potential incompliance maybe, and they want, for example, to change HTS code or ask you to change HTS code from one to another one. They also can mention in that CF28 or CF29 and ask you to conduct review of all similar transactions with these HTS codes or similar HTS codes. Or any other compliance issues for the past 5 years. This is one of the most common reason why would you submit prior disclosure report. But in practice, we saw some other cases when you have to submit a prior disclosure report. For example, sometimes CBP conduct random interviews of importers. And if CBP reach out to you and they send you CBP interview questionnaire and they say that ask you to provide responses to that questionnaire, and then they want to conduct actually formal interview. It might be the case when you also want to submit prior disclosure, because those your responses to that CBP interview questionnaire may trigger some issues, and they might not be compliant. The other case when you want to submit prior disclosure, if you just conducted certain internal investigations, reconciliations, some internal customs audit, and on your own you found some certain mistakes, and you want to fix those mistakes, it's and before CBP, so you found out about those mistakes, and before CBP finds out about those mistakes, you want to submit prior disclosure and secure your findings to make sure that no penalties will be imposed on you. No penalties will be imposed on you because you submitted prior disclosure, and you will be fixing all those incompliant issues. And there might be some other cases when you should file prior disclosure. Anything that indicate that you are on CBP's radar, maybe a trigger for you to submit prior disclosure. Can be a lot of different cases. And I think that's all we have. Samir, do you want, or Michelle, do you want to close it out?
And thank you all for joining. Quick plug for us. If you're not already subscribed, please subscribe to our blogs, Thompson, Hine, SmarTrade.com. And also, we hope that you'll join us for the last two sessions we've planned over the next few weeks. November 14th, which actually was rescheduled from November 7th. We're covering trade policy. November 21st, we're finishing the 5-part series on trade remedies. Thanks again for your interest in this webinar and all of our webinars and really all of our content. We really appreciate it. And thanks for attending.